Hey everyone. So people asking whether AI trading systems are worth anything in practice or whether it's just another layer of complexity sitting on top of the same old promises. And that question has a different weight when there's actual time and actual capital that's gone into finding the answer. So this video is a full walkthrough on a platform that's been part of the testing rotation here for years at this point, not weeks, not a couple months. And then getting into the process of how something even earns that kind of extended attention. And rather than just flying through the setup, going to take each step separately and explain what's actually behind it, because the configuration decisions here aren't arbitrary. So first up is preset selection. 3 modes: safe, optimal, aggressive. This is essentially telling the system how to operate, execution style, how much risk to carry, what return targets look like, and the minimum capital each mode needs to actually function. Then goes to neural network. This is model selection, which AI is actually doing the work. Worth being clear that these aren't just different names for the same thing. Each model is trained around a specific market environment. Some are built to operate in fast-moving, high volatility conditions, others designed for tighter markets where the price action is compressed and slow. No strong read on where conditions are sitting right now, so I'm leaving it on auto select. That scans the live market state and assigns whichever model fits the current structure. Okay, amount next. Capital for the session, nothing complicated, just whatever the session calls for. Okay, network selection is one of those things that looks simple but has real consequences. This AI system doesn't work off a static list. It pulls live data and sorts available networks by current load and fee rates in real time. What's at the top of that list changes depending on what's actually happening on chain at that moment. And this isn't a detail to skip past because transaction fees come directly out of margin. A session that looks profitable on paper can look pretty different once network costs are factored in across a full run. Okay, then authentication. 2 paths. Wallet Connect handles the whole thing automatically on its own, or manual, where the transaction gets submitted independently. Going manual just to keep every step visible, nothing happening behind the scenes. Okay, good, and now press Start AI. Model loads, market calculations run, system locks onto current conditions, and the session kicks off. So now we're stepping back for a few minutes. All right, paused the session and results are on screen. Total balance, profit from the session, number of trades executed, win rate, and up here, trade log. Every position the system opened and closed laid out in sequence with the reasoning behind each one. This is something that's kept this one in regular rotation longer than most. The end number matters, but being able to actually read through the decision trail matters more. Without that visibility, there's no real way to tell whether a good result came from the system performing or just from conditions being favorable at the right time. So, withdraw step. Here, I select the asset and paste receiving address. Okay, protocols picked it up. Now we wait a few minutes to process. So while that clears, worth getting into why manual trading dropped out entirely. The core issue is timing. Arbitrage opportunities in this market close in sometimes few seconds. That's not about being fast enough, that's just a gap that no manual workflow closes reliably. What a properly built AI system does is hold the full market picture simultaneously. Live liquidity, gas costs across chains, spread differentials, slippage, all of it processed and executed before a manual process has even registered the opportunity existed. Spent a long time trying to patch that gap with various tools and setups, and the conclusion was pretty consistent across all of it. And what makes this particular platform worth the expended attention is the track record. Years of operation across different market cycles. Bull runs, contractions, periods of extreme volatility, stretches of flat, compressed action. Most systems in this space either degrade after a few months or disappear entirely when conditions shift away from whatever they were optimized for. This one hasn't done that. The performance across very different market environments is what separates it from most of the competition. And that's not a judgment based on 1 or 2 sessions, that's accumulated over a long time. Last section is the evaluation process itself, because arriving at that kind of conclusion takes more than just watching a session go well.
The first part of it is coverage, going through every feature the platform exposes, every setting, every configuration, every mode, run multiple times with actual attention, not skimming. What that's testing for is just, does the system behave consistently with what it claims to do? And after enough platforms, there's a feel that develops. Something designed for long-term real use has a different quality to it than something built to look credible on a quick first pass. Hard to define precisely, but it's not subtle once the pattern is familiar.